You were listening to ChartingWealth.com for Tuesday, the 6th of June, 2017. The chart that we have on the screen right now for those watching by video, if you're listening by audio, I'll tell you what it is. It's the S&P 500 chart going back about 21 years. It is our quarterly chart with our charting parameters, with the price percent oscillator and the derivative oscillator using quarterly candlesticks. So that's once every 3 months these candles are drawn. Those of you who know how to read a chart can see how incredibly accurate it is. Once we have crossovers going down, it would tell you to get out of the market. Once we have a crossover going up, it would tell you to get into the market. Each and every time would allow you to get out of the significant loss when the market crashed back in 2001, to get in early 2003, about mid to late 2004, ride it up to the top, jump out, watch it go down through 2009, jump back in right about the end of 2010, 2011, and ride, baby, ride up until right at the beginning of 2016. Then we have the Trump effect that we're going to talk about in particular there, and we have a new crossover that's actually occurring. Do we have a new rebound that's about to occur? We'll talk about that. But this chart is an incredible chart. If you did nothing but look at the market once every 3 months and use this chart to guide you, you would have done spectacular during the last 21 years. We want to share with you how the chart works, how to read it, and what to do going forward. Now, we're an education firm. We're not a stock calling service. We just want to educate you on what we see, what we have seen. This is available to long-term investors and also to financial advisors. Imagine, as a financial advisor, if you knew how to read a chart and use the kind of chart that we have for the quarterly, what you could have done for your clients, keeping them out of huge losses and getting them into great wins. Anyway, something for you to think about. If you're a long-term investor, you've got your own money in a self-directed IRA or a 401k where you can direct it, something to think about. Again, we're an education firm. We're not a stock calling service. We're not financial advisors. We will share this information. If you wish to sign up, tell us a little bit about yourself. We don't just open it up to anyone. It's going to be we're going to do the broadcast and we're going to share it with the folks that we approve. Tell us about yourself, why you're interested in it, and we will consider you for it. There is no fee at all. We don't charge you. You guys who know us, you know what we do and how we do it and why we do it. There is no fee involved at all. Happy to share this information with you. Just want to know a little bit about yourself and what you want to do with it. Again, cw@chartingwealth.com. That is our email address. Of course, you can also email us directly from the website, chartingwealth.com, under Contact Us. Now, my friends, let's jump into the charts. We're going to go from the quarterly chart to the weekly. We're going to zoom in a little closer. We're going to see what we see on the S&P 500. S&P 500 down just a little bit for the day. However, we do have a weekly vertical crossover that occurred at the end of the previous week on the 2nd of June. That actually occurred, and we had a jumping in point on Monday, the 5th of June. So if we zoom in on the 2-day chart, what do we see? We had our jumping in point. We continue in our Heikin-Ashi candlesticks to see the average pace of the stock growth accelerate. We see our derivative oscillators gaining energy on that on the 2-day chart rather. That 2-day chart crossed over all the way back on the 25th of May. And we are above the 2-day trend line because we just had a weekly vertical crossover going in the opposite direction, been going down previously. Of course, we do not have a weekly trend line yet. we can start drawing it actually when the candle ends. I guess we could draw it now, but again, that's sort of cheating. Again, we did have a little bit of a down day, 0.09%, but that did not affect our Heiken Ashi candlesticks and continuing to move up along with the derivative oscillator. So continue to watch that. Of course, your jumping in point on the 30-minute chart at, and we have to sort of zoom back there, at 10:30 a.m. was somewhere around 244.06. The market closed at 244.05, so you were not much worse for the wear. I guess it hit a high point at some point of 244.26. So again, we shall continue to watch. If you look at that 4-hour chart, of course, it's continuing to slide sideways for the last 3-4-hour sessions. So do keep an eye on that. It may be getting ready to tap back a little bit. And of course, watch that 2-day chart. It's continuing to move up and again closed, actually jumped up above that 2-day trend line. So continue to keep an eye on things on the S&P 500. Hopefully this weekly vertical crossover will be a successful one, as have many in the past. Now let's keep moving ahead. Look at the Qs. Of course, we jumped in on that Qs after a weekly vertical crossover going up somewhere in the neighborhood that following week around 134, 135. And of course, it hit a high during the course of the day of 143.68, up about $9. Not bad since what? I guess right at a month. Not bad for 4 weeks. Not bad at all. That's the magic and the beauty of the weekly vertical crossover. So we are still in that trade moving up quite nicely. We can take a look at that 2-day chart. Again, nice movement. Derivative oscillator just flipped over, moving up on the 2-day chart. Again, keep an eye on things. We like to keep the profits that we made, so it's looking quite nice. Back to the weekly chart now. We're going to TLT, down 0.64% for the day. Of course, we had that weekly vertical crossover back in February. We had the 2-day crossover back on Friday the 19th. And we've seen now 4 weeks, we're going on 4 weeks of strong up movement. If we look at the 2-day chart, what do we see? We see again that 2-day chart above we had a little bit of a bump up above that 2-day trend line, still well above the weekly trend line. Do keep an eye on the weakening, little bit of weakening, not super strong weakening, but a little bit of weakening on the derivative the derivative oscillators remaining flat. The price percent oscillators weakened just a little bit, not going up at the same angle it had been that week ending that week ending from the 31st to the 2nd of June. So again, just keep an eye on things. We like to keep our profits, don't we? Okay, let's now keep moving along. We'll go to the weekly chart. Take a look at gold, up 0.10% for the day. Remember, gold's been in an up move since all the way back in January. Was up for a while, down over a couple of periods, but again, started moving up again after we saw that 2-day vertical crossover there around the week ending the 26th of May. And we see continual up movement. If we go to that 2-day chart on gold, we see it's well above the weekly trend line, still above the 2-day trend line. If we zoom into gold on that 4-hour chart, what do we see? Well, we see that gold is continuing to move up. It keeps bouncing off the red signal line. And again, this 4-hour chart, as many of you know, is our prescient, the best chart. You could use it as nothing but a trading chart. Every time that 4-hour chart seems to cross over going up or cross over going down, gold follows suit no matter what other charts you look at. Our gold 4-hour chart is amazing, except in the months of late December and early January. For some reason, it stops working then. So continue to keep an eye on it. We saw gold ended at the end of the day with a bit of a red open box candle. So just continue to watch and let's see how high gold will go. Again, folks, thank you so much for joining us. If you're interested in that special training on the quarterly chart for long-term investors And for financial advisors, you need to email us cw@chartingwealth.com. That's CW as in Charting Wealth, cw@chartingwealth.com. And again, subscribe to our daily podcast. It's this video cast and an audio cast also. And we will send you great show notes with all sorts of information and links on there to our How to Read a Stock Chart video, to our daily market worksheet, weekly market worksheet, trader worksheet, and the layout that we use at freestockcharts.com. And what is the cost on all of this? Priceless, my friends. Thank you so much. God bless. All the best from chartingwealth.com.